Well, it's time for another Rogers Capital Management commentary where we attempt to be the antidote to water cooler wisdom. Last month, we talked a little bit about the bear market arguments that were making the rounds and why they may be a little bit overblown. But we ended that conversation with a discussion about volatility. And wow, how prescient was that? It seems like for the last several weeks, every other day, the market's up or down 200, 300, 500 points, one direction or the other. We talked a little bit last time about 4, 1, and 1 and 4, right? 4 times a year, we see a market pullback of 5%. Once a year, on average, we see a 10% correction. And one in every 4 or 5 years, we see a bear market, a 20% downturn. Well, September was down almost 5%. And now we turn the page to October. If I asked you what the worst month of the year, stock market performance-wise, what the worst month of the year was, what would you guess? I need some Jeopardy music in here. Most say October. I think that's largely due to the fact that several of our more notable downturns have been in October. The crash of 29, Black Monday, the crash of 87, and much of the carnage of the 2008 financial crisis was in October. But it's actually not October. It's September. Now, October is the most volatile month of the year, but not the worst. October is known for volatility. But volatility is an interesting thing. You see, it goes both ways. Upside volatility, I don't hear too much about. Downside volatility, well, that's when the squawking starts. Now, over the last 20 years, October has actually been the 4th best month of the year, stock market performance-wise. But no other month sees the 1%, 2%, 3% swings in either direction like October. But pullbacks and corrections are normal. In fact, since 1980, the average S&P 500 index year sees a 14% top to bottom correction. 14%. Average. Normal. Of course, the million-dollar question is, how will we finish this year, 2021? And there's a lot to be concerned about. Politics, the debt ceiling, inflation, gas prices, labor issues, vaccine mandates bearing down on us, higher taxes on the way. I'll just leave you with this one tidbit. When the market is up at least 12.5% coming into October, in 9 of the last 10 years, stocks finished the year higher. That was a good one. I'll give you that one again. when the market is up at least 12.5% coming into October, like we are this year, 9 of the last 10 years, stocks have finished the year higher. Well, we'll see. See you next time.